Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting the Asian session live market analysis today, that is 15th of September, between 5 and 5:30 GMT. I'll explain the expected market moves or the derived forecast for this particular week, 15th to 19th of September. And also the levels in which the currencies are expected to swing during this particular time frame. And also we'll fine-tune the forecast using the market trading technique and also the trading strategy, how exactly we can consistently enter and exit in the market, identifying the appropriate market moves. So, now last week, when there was so much of uncertainty with regard to the moves in the case of Euro and GBP, many were thinking that Euro and GBP could drop big. And also, people are thinking that Australian dollar could reverse and rise. Because earlier occasions we have seen that Australian dollar was relatively stronger when compared to that of Euro and GBP. But I gave the forecast that Euro and GBP are expected to reverse and gain the levels, and also the denominator currencies USD and USD CHF are also expected to gain the levels last week, and the commodity pairs are expected to show the USD gaining move. So now you find that USD gaining move is seen in the case of USD CAD and Australian dollar. And Australian dollar, from that of Friday close, they had dropped already about 41 pips. And it made a brief upward stop and then start making the slide. But in the case of Euro and GBP, they are slightly lower than that of Friday close. And you know that they make the week beginning false move in the case of the majors. And afterwards, when it is on the downside, then they are expected to gain the levels again. And you come across a contrarian move is happening in the case of Euro GBP and USD Yen in order to make a downward move in the case of Yen crosses. And we have seen also, I was explaining last week that Yen crosses are going to be the beneficiaries because Euro and GBP are expected to gain, and also USD Yen. Exactly, they gained the levels. And these people are not in a position to understand how come Euro and GBP are gained whereas Australian dollar is dropping. So this is how the players make the unassuming moves in the market. So we need to read and fine-tune their intentions. Then we will find, as per our expectations, the market will move. Then it becomes very easy to trade in the market. And also, if you use the trading strategy, absolutely no fear in the market. So we simply eliminate the market fear and trade with full joy and try to see that we don't miss opportunities while entering into that market and also exit out of the market by looking into that of the time frame followed by that of the players. And we always try to look into that of the 30 minutes time frame, how exactly for 30 minutes they are making the move. Then we try to decide whether to exit near the high when a buy is taken, or we try to allow the position to maximize the profit depending upon how they are handling the highs and the lows during different sessions of the day. Now coming to that of the forecast, the derived forecast. The derived forecast is an estimate, statistical estimate based on a sequential algorithm, a sequential statistical calculations, and with which it is being projected for the entire week. And you know, this week there are two prime important things or prime things, namely FOMC meeting and also the interest rate decisions. Then another one is the Scottish referendum. So normally when such events are there, initially the market might show lesser volume because people might keep aside and they do not want to commit. And many of the analysts are also giving the suggestions that keep away from that market and only trade in options. So when the uncertainty grips, when the market fear grips to that of the analyst, then it is not only they become afraid, they make others afraid. Hmm? So that is how, like a viral fever, it spreads, the fear spreads. But ultimately, we know very well in the market, they can either make an upward move or a downward move. And we try to find out the possibilities, and in the eventuality it has gone wrong, then we have the hedging to limit the risk. So when you have such a solution, then why should we be afraid of the market? So many of the occasions I find that whenever such the fundamental data or fundamental events to take place, immediately the analyst become jittery, then subsequently make the traders or those who follow the analyst also become jittery, and they try to think of various strategies like a breakout trade. After the rise, go and buy. After the drop, go and sell. Otherwise, keep away from the market. So this sort of decisions are taken when there is uncertainty about the market. So we have to reduce the uncertainty and make it as a certainty as much as possible. That is why I am giving the forecast free of cost for all those who follow me here in FX Street. And all the 5 days gross forecast is given so that you need not subscribe and you can simply watch and trade and earn your money. Because my basic intention is that many of the small traders who enter into that of the market with the objective and the aim of improving their income and try to increase their lifestyle to a certain extent. But in the process, they lose a lot of money. And many of the traders, they come tell me that my wife does not know that I lost so much of money. Some ladies say that my husband is not aware that I borrowed so much of money for trading. You have to help me. So I find really pity with such people that in distress condition they trade, and when they trade in distress condition, the fear is going to aggravate. In the process, you find that more and more losing is possible because we all cut the loss only out of fear, only out of margin fear. So when a position is taken, immediately it will show some loss and 5 pips or 2 pips, whatever the spread. Then subsequently, when you try to hold it for a longer duration, the market might move in our favor or it can go against us also. In the event if the market goes against, then the fear grips because the usable margin gets eroded, and immediately they try to cut the position. Later on, see that they cut the position out of anxiety and out of distress condition, and later on the market moves in their expected line. So this is one of the unfortunate situations for many of the traders. That is why I always tell such small traders who have got lesser equity to be an opportunity trader. That is, let them make some spread of 40 pips between the high and the low, and also make some quick moves near that of the low, or make a downward stoppment during early or the late sessions. During the early or the late session, then you try to trade only in the case of Euro and GBP. You will be able to really slowly build up your equity. I don't know what to do beyond that. I can only give the solutions. I can only explain how and why they are losing the money. And I cannot go and trade for everybody. So you have to understand the limitations and try to do it and try to eliminate the fear. And definitely I'm confident that you will become a successful trader. Why I explained all those things? Because during the weekend I received so many mails with regard to all the distressed traders, and Some of them called and said that they have got some unfavorable positions, how to get rid of, etc. And also that they don't disclose their losses to the close relatives. It's a very unfortunate situation because in the world, the predominant of the losers, they don't tell about the losses. But if they make in one trade a good profit, they just propagate it like anything. And also in the forum and everywhere, they'll come and say that I made 80 pips profit, I made 50 pips profit, etc. But when they lose, they don't disclose it. This is human limitation. So now coming to the forecast part of it. This is the third week of the month. The market is expected to make the trending move again. So last week the trending was an upside or the upward trending move in the case of Euro and GBP, and also the upward trending move in the case of USD and USD CHF, and USD CAD and USD CAD and Australian dollar were showing USD gaining move. They are expected to continue the same after making the weak beginning false move during the early part of the European session. So they are expected to make the small swing and slide in the case of Euro and GBP during that of the late Japanese session, and then they are expected to make a small dip and then firm up during the later part of the European session. The dip will be the weak beginning false move, and then subsequently slowly and steadily they are expected to firm up during that of the US session. So you'll come across that market is making only firm up move. Then afterwards tomorrow they are expected to make swing and firm up on the swing and slide move. Afterwards from tomorrow Europe US session they are expected to make the rise in the weeks in the market. Then subsequently you'll come across on Wednesday the dip and the rise during that of the Japanese session, then swing and slide during that of the European session. As I explained that in the previous webinar or previous week also, that they intend to make the slides during that of the European session and the gaining moves during that of the US session in the case of Euro and GBP. And that is how slowly they will gain the levels. So they will discourage the Europeans taking the long positions in the case of Euro and GBP, and they will discourage the US traders entering long in the case of US dollar. So they act against the traders. And then subsequently you'll find then the dip and the rise move on Thursday. Wednesday you come across the FOMC. So you can understand what they are going to do after that of the FOMC rate decisions. The market is expected to make a rise or it may be a spike also. Then the next day you come across the Scotland a referendum is there and the outcome will be revealed. They are expected to make a dip and the rise move during Japanese session, then swing and slide during the European session, as if there is going to be a different scenario in the market, and then subsequently during the US session they are expected to make a swing and an upward spike. So the spike they might start from that of the early or the mid-European US session. So depending upon the release of the referendum information, and then you'll find that there is no separation. As a result, you'll find the market is Euro and GBP are expected to spike up. And then you'll come across visible upward spikes in the case of GBP, and you know that it is a currency which makes the trend to start with in order to create the market sentiment. And on Thursday, before that of the upward spike, there is a possibility of making an extended downward move in the case of GBP during that of the late European session. They could make one big downward move as if the world is going to come to an end, and in a matter of about 2-3 hours they will simply reverse and go above the from where they started and start gaining upward as an extended stop and to make the trending move more visible on the upside. So always keep in mind, use the hedging is a vital thing, and use the trailing hedging order in your buy positions, and once they quickly drop, then hedge you and quickly drop and stop cutting the new low for just 10 to 30 minutes. You just watch and close it. Don't be afraid that there could be a different outcome and things like that. They create such a hype and close, book profit and keep 30 pips below the hedge order. You'll find after the release of the referendum, the market is expected, GBV is expected to spike upward. Okay, so make use of that and try to earn on either side, on the downside as well as the upside. Then on Friday, you'll find the market is expected to make a swing and slide as a profit booking move. Then subsequently make a swing and rise during that of the European session. All the short sellers will come for a short covering at that time. Then afterwards, they will make the swing and firm up, continue the intentional move on the upside in the case of Euro and GBP. So these are all the expected market moves for this particular week. And also to the levels, we'll come across the lower level swing and then rise in the case of Euro and GBP, and middle level swing and rise moves in the case of USDN and USD And in the case of Canadian dollar, middle level swing and rise is expected. So all the five currencies are expected to show very frequently the green color in the live market put page as far as the net change is concerned. All the five currencies will show green color in net change. So what they are doing now is the red color, and that is the week beginning false move they are doing. But in the case of USD CAD and Australian dollar, they are expected to make the USD gaining move only. USD CAD to gain upward, and the Australian dollar is expected to make a downward move. Coming to the levels, now Euro could consolidate around 2950 and go up to 1.3250 level. Then GBP to from 6050 to 6650 as an upward spike, and USD Yen from 107 to 108.75. Then CHF 93.25 to 96.25. Then Canadian dollar 1.1075 to 1.1275, and further higher they will make it next week. Then Aussie, they are expected to come down to 87.50 from that of 90 level. So don't do buy and sell trade in the case of Aussie. You might think that Aussie has corrected, so we will better go long. But if you long, you may see about 20-30 pips profit. Rarely there might be a upwards move of 30-40 pips in the event if they find more short sellers and there is no buyer in the market. The players will try to quickly gain the level when GBP is making an upward spike, and so that all those who have gone short will try to keep the buy orders and the players will hammer it down further. Then MRC, can we anticipate another 2 to 6 weeks rise in the case of Euro? I told you, if you remember, even much before that, till end of the year, we will come across Euro and GBP to gain. In one more week, can it reach 1.32 or maybe 2 to 6 weeks? So you seems to be very conservative because of the market sentiment, but you just see how exactly the players act against it of the expectations of the traders. So these are all the levels in which the currencies are expected to make the moves. So try to take your trading decisions accordingly. So in all the five currencies, the Euro, GBP, USD, and USD, CHF, and USD CAD, whenever there is a dip, when they are closer to the low or made a brief downward stopping and increase the spread between the low and the high for more than 40 pips, you try to take a buy position, hit 30 pips hedge order, and then when they make an upward move, keep stop at entry, and then once they continue to go up to high, watch it, whether they stop with that of the high or still go higher than that of the high as a stopper or an extended move or the intentional move. Try to identify the move depending upon the velocity of the move. If it is a slow pip by pip move, it is intentional move. Straight away you can understand. If it is a quick rise of 20-30 pips, then it is an extended move. They might do it for about 2 hours. And if they go and quickly come back in about 10 minutes, then it is a stop point. Then identify that and then exit out of the positions according to the type of moves they do it. Focus to trade those currencies during early and the late sessions. Now, these are all the initial lows and the highs I noted down by 3:30 GMT, and we will try to find out how exactly the market is at the current situation. So Euro has not breached the low or the high, which are set around 3:30 GMT, and GBP also they have not breached the low or the high. And in the case of yen, they just breached the low. 107.19 was the initial low. They breached and formed 3 pips below the low, 107.16, and then started gaining the level. So it is a brief downward stopping before going the rise, making the rise. And high they have not breached it. So they may just do the downward stopping. They are not expected to look back in the case of USD yen and USD CAD. So keep that in mind and trade accordingly. Don't think that like Euro and GBP they will make either way moves. In the case of denominator currencies, I have mentioned many times, they make one-sided move. Let's drop and more rise, let's drop and more rise. In that sort of moves they will do it. And if you take a position on the wrong side, then you will be vulnerably trapped. Then USD CHF, they cannot breach the low or the high. Canadian dollar, they just low is not been breached, whereas high is been breached. So you intend to gain the levels. Then Australian dollar, they breached the low, and 0.9000 was the low. They just breached and formed 16 pips below the new low, 0.8984, and they are expected to hold below that of 0.90 for more than 2 hours and start making the slide. But at that time, Euro and GBP, and also USD and USD CHF are expected to make alternative upward moves. So try to understand the trend. Then you try to do the market reading and see whether the market is closer to low or closer to high. If it is near the high, not breach the high for 30 minutes from start of the session, take a sell position. The market is near the low and not breach the low for 30 minutes from the start of the session, take a buy. Then keep 30 pips away the hedge orders. Then once the position makes profit, keep stop at entry and eliminate the risk. Then take profit can be 45 pips away from your entry. And if the going is good, if they are making good swing, then 75 pips would be the ideal exit or take profit limit. So that way you can do the swing trade. And now during the trending time, if you have got the lower level buys, you can just use the trailing stop, and the trailing stop can be about 35 to 75 pips away from that of the market. 75 pips away from the market, that means if the trailing stop is filled, definitely they will give you a better chance for you to re-enter again in the market in the same direction. If you are holding a buy position in the case of Euro or GBP, and you can still continue to buy if they hit your 75 pips hedge order. Otherwise, or the trailing stop. Otherwise, they are expected to make only 20-30 pips on the downside and then continue to make the upside moves. Then these are all the market timings. So I've been showing it during every webinar, but I want you to become familiar with all these things and try to only follow these market timings, and also understand they will handle only 2 currencies at a time and also the respective crosses, and then accordingly choose such currencies. The currency which is making spread of more than 40% between the high and the low are being handled at a given time. Till such time, you just wait because they have to make a false move to induce the traders to commit wrongly and then make the intentional move. During such false move, quick move, you try to enter into the market, you will find in no time you will be able to see the profit and keep stop at entry. So be an opportunity trader forever. In the low volume market condition, it becomes vital so that it will not test your patience. Now, coming Thursday, I have a meeting, so I'll not be able to present the review part of it forecast. So I'll come back on 22nd September next Monday and try to give you the forecast for the next week and also review for you what had happened in this particular week so that we will have a continuation of understanding the market moves. If you have got any question, kindly ask me. I will be willing to answer to those questions. Then Gregor, how about stocks to perform until end of the year? Everybody expects the big corrections. Yes, now the players are holding high and building sell positions in the stock market. They quickly gain and they hold near the high set for the season and then booking profit. But all the traders will be bullish and they also take sell position. The traders find that they are not in a position to book profit, then automatically they think that okay, market might make further upward move. But the players hold and they hold it very nicely by doing circular trade. They keep a buy order. They keep a buy order in the market, and if you want, you can sell it to them. They will absorb it, and they will keep a sell order adjusted to that, so that you just sell it to them and see that the market is not coming down. Automatically, you go and do the short covering, and then they remove the buy order, hammer it for about $1 or $2, and again keep the buy order back. So that is how they just distribute the positions at the highest level. So you need to understand that. And if it is delivery-based trade, then it will be nice. If you have got delivery of the positions, you can just liquidate when the market is showing the all-time high. Then subsequently, when they are all available at the cheapest level, don't run away from the market at that time, try to buy back. Because the players cannot go out of the market. And such a huge money, if they want the money to work, they have to deploy it in the market. And none of the occasion, even if the world is going to come to a grinding halt, they are not going to keep away from the other market. Keep that in mind. And then whenever there is a big drop in the market and everybody is panicked of liquidating the long positions, understand the players or the buyers. That is the usual tactics. They just create the market fear using the media, using all possible communication channels, and tell the traders that keep away from the market, keep away from the market. And those who have got the long positions liquidate in distress. They would have done the bottom fishing, but they will be induced to liquidate the long positions at the lowest level. You know how Euro was making a turnaround around 1.29 and below, and GBP how exactly 1.6060. They have been making that downward stop and creating the fear it could go down in a big way. Then later on they just moved opposite to that. You expect next week rise? Yes, it is going to rise till end of the year. YEAR, till December end. So it is not only next week and continuously. Any other question, please? Okay, then I will just show the forecast slide. So these are all the expected market moves. You can take a screen print or you can just refer to the recording of the webinar later on. on a daily basis and find out how exactly they are going to make the moves. Use it as a gross outline instead of using it in an uncertain condition, because whenever you come across the currency reaches one level, then immediately you find there are two possibilities. So when euro is around 1.2954, the next support is 1.2922, next one is 1.2873, then 1.2812, like that. Then in the event if it goes up, it can be 1.30 and 1.3085. So you get on either side the forecast. Still, it does not help you whether it is going to come up or go up or come down. So that's uncertainty. I'm trying to eliminate it by giving this expected market moves for each session of the day. Then, okay, now euro is expected to make a slide, but the spread is less, so don't do any sell. But afterwards, they are going to make a dip, probably a brief downward stop, and then once they stop cutting the new low, then you take a buy, then they are expected to firm up and then also firm up during the US session, book profit. That is how you plan your trade following the expected market moves, and also fine tune it using the market trading and also the levels I have given it. They are all mathematically derived levels, and the market can slightly breach such levels and later on they will come back. See, now in the case of GBP, they just come below that of the expected levels and holding it there, and slowly they are expected to come up. So that you try to understand, and they are all mathematically derived level with a variation. Market will hover around that of the levels, and probably it may get delayed depending upon the volume. So make a note of the initial lows and the highs on a daily basis, and then try to find out how exactly they are taking up the market. You will be able to find that every day they make the higher lows and then continue to do upward move. And on the third day, they make a lower low, create the feel as if the market is going to drop, and then subsequently they breach the high of the other 2 days and continue to make upward move. So keep in mind that the players are here and to distract us, or they will make us to believe what is not going to happen in the market, but they will make the unexpected move so that we continue to develop the market surprise, and that leads to emotional trading. And everybody talks about emotions, how to control emotions, etc. Ultimately, emotion is within ourselves, and when the extraneous stimulus come, when the price action comes, and whenever you find 30-40 pips quick rise or a quick drop, immediately that act as a stimulus, and which act against that of your endocrine gland, adrenal secretion increases. Then you find that you are not in a position to control your mind, and it develops a fear, the fright condition, and then go in for a distress trade. And in the event if you become nervous, immediately drink water. Once you dilute the secretions of the endocrine glands, the ductless glands, you find they are all in the blood. And once it gets diluted, when you drink enough water, of 1 liter water or something like that, immediately you find that the fear goes off. Then you use your common sense, use your brain, and try to trade carefully. And to avoid getting triggered, the best thing is don't look into the chart. In the chart, what happens when the market is just 22 pips spread, and the chart will be making the candles every 5 minutes or 15 minutes, depending upon the type of charts you are using it. And suddenly, when there is 30 pips move, which is beyond this level, immediately the chart becomes magnified, the candle becomes bigger when compared to the previous candle. When a big red candle forms, you immediately develops the fear. Whereas if you look into that of the live market put page, you can understand, okay, earlier it was 10 pips negative net change. Now they made as 25 pips negative net change. That's all, 15 pips drop. But when a big downward red candle forms, immediately think that there will be subsequent 2 more red candles. You just go and sell. Then other candles might be for 1 pip. and reverse. So that is how the players pretend as if the market is following the technicals and trap the traders. And if you want to get trapped again and again following it, then it is up to you. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and also you people who have come here to listen to the webinar. I'll come back next Monday and review the forecast, what I have given for this week, and also try to give you the forecast for the next week. So keep in mind that you'll come across the strong reversal is expected in the market, and avoid doing sell and buy trade in all the 5 currencies other than Aussie. Thank you one and all. Wish you all happy trading. See you next Monday.